Thank you very much for joining me at Wired Money. I'm Gianluca Picelli. I'm a senior editor at Wired, and I'm delighted to be hosting this panel about the present and future of central bank digital currencies. If you don't really know what central bank digital currencies are, you're not the only one. They're also called CBDCs, and they are defined by the Brookings Institution as a fiat currency issued by central banks in a digital fashion. Think about them as sort of digital banknotes minted by central banks to be used by the general public. The advantages include, for instance, better financial inclusion, lower or no banking fees. There are also many questions about the impact CBDCs might have for privacy, monetary policy. There are many questions about whether they would include or should include blockchain or cryptocurrency technology. So many questions. What we know for sure is that a lot of countries are looking into CBDC. According to one count by the Atlantic Council, as of today, 81 countries, including the UK, are looking into some kind of CBDC. They're planning to maybe launch one, maybe just piloting one. We know that China is piloting a CBDC as we speak right now, the digital yuan, and that's essentially quite a big deal, I suppose. So what I'd like to do today is, first of all, pin down what CBDCs are and how they work. Second of all, how they will change the way we think and think about and use money. And third, I'd like to understand why it matters. Fortunately, I'm here with three wonderful panelists. First of all, Ashley Lannquist, the blockchain and digital currencies project lead at the World Economic Forum. Tom Mutton, the director for FinTech at the Bank of England. And Gabriel Abed, who, as the founder of Bitt, oversaw the launch of the Eastern Caribbean CBDC early this year. Thank you everyone for joining me. Good, well, hope you're all very well. Ashley, maybe let's start with you. I've seen that you have compiled a very long list of all the research that has been written and published about central bank digital currencies. So maybe you are the best person to start with. Can you give me a sense of what we are talking about here? What is CBDC? Why do we want it? Do we want it?
Thanks, John, and thanks for having me. It's great to be here. So CBDC is a very interesting topic. I've been covering it since 2018, and there's a lot of interesting things it could help economies with. Developed economies, such as United States, Canada, Euro area, tend to be enticed by opportunities for CBDC to ensure access to central bank money if cash usage continues to decline, that people could have that real access to a direct liability of the central bank, like the banknote is. It could also maybe help improve payment and banking competitiveness if there's monopoly power in those providers in the economy, perhaps. Maybe it could be used to distribute stimulus payments in a way that's better than pre-existing options, although I'm personally a bit skeptical on that. On the developing economy side, there's a few other policy or economic challenges that CBDC could help address. It could potentially help with financial inclusion or financial digitalization in the economy. It could help reduce the costs of physical cash, of moving it around. I'm sure Gabriel can provide some insights with Caribbean on that. And it could also potentially help domestic or cross-border payment efficiency, lower the cost of payments, including maybe remittances, could help with payment system safety and resilience. And lastly, maybe something about preventing currency substitution in the economy if there's some dollarization risks, or maybe new forms of digital currencies that I'm sure we'll get into, applying currency substitution pressures on the economy. So that's a set of policy and economic goals CBDC could help with, and it's why the central banks are interested in researching.
Right. Gabriel, do you want to explain me a bit your journey as one of the people who were the team behind the CBDC launch in the Eastern Caribbean? I think in April 2021, right? Yeah. Give me a sense of the thinking and the kind of why you think that was a good move and how it worked out. Actually, how do you go about designing a CBDC and how is it going right now?
So let's do a little bit of history. Bitt actually was founded in 2014, and it's been an uphill battle to get to this stage. The world really didn't start taking CBDCs seriously until 2019. So for those first 5 years, persons like myself were flying all over the world saying, "Hey, this company out of Barbados invented this thing that could utilize blockchain technology and really help central banks achieve their goals." That was quite a difficult challenge in the early days, and I was more involved with the company, or very heavily involved, the CEO and founder in its first few years. Less so now, as the Bitt team is run with a great set of leadership and management, of which I'm not involved with at the moment. But what I can say is that what led to that was the critical issues that small island developing states and developing nations face. I think Ashley touched on some of the areas where CBDC can benefit, but what you're talking about is, and I think this is the cornerstone issue, is a large percentage of a population being unbanked or underbanked, along with other issues that they face, such as the cost of banking. I think the CEO of PayPal once made a comment and said it's very expensive to be poor. And this is seen true in these developing nations. And a central bank digital currency comes out and provides the capacity for every single citizen within a particular country to immediately have access to a global financial product. Yes, it's domestic based, but ultimately, when designed well, it allows users and consumers to have global access. And I think it's pretty important to touch on the most primary objective of a CBDC, and that it's creating an e-public money service. You're creating a uniform payment gateway or payment network for the entire country of its offering. And that's very important because it's not one individual or corporation offering a closed loop network, but instead it's your national monetary authority providing a blanket coverage to all of society, all corporations, and all users. And that is extremely impactful, especially in a competitive banking environment. How is it going right now? I would say that if you read the news on Bitt, and the movement of central bank digital currencies in general, it's extremely positive. Bitt just won the contract for Central Bank of Nigeria. So I need to, on this, maybe at this moment, pay kudos to the Bitt team and what they've been able to accomplish. Because, again, getting a nation of 200 million people to move towards this type of product and initiative is a massive milestone. And as you mentioned, the Atlantic Commerce, they have stated that nearly 80 plus central banks are currently endeavoring to take on a central bank digital currency. When we were doing this back in 2014, 15, 16, 17, and 2018, the total count of central banks looking to do this was 0 plus 1, maybe, in some instances. And that has dramatically changed in the last 2 years with more central banks being educated on the topic and more central banks being willing to understand what this means for them, what it means for the consumers and the corporations below them. So I would say it's a very positive change in the direction of the wind.
Yeah, I believe, I'd say. Tom, do some of these considerations about a large unbanked population and several other problems specific to the Eastern Caribbean scenario that Gabriel described, do they apply to the UK? Would the UK launch, if ever, a CBDC for the same kind of reasons, or would there be other reasons behind it? What would be the kind of factors to be taken into account?
So thank you, great to be with you. No decision on a UK CBDC yet. We're exploring it with an open mind. Ashley really has been absolutely spot on the possible set of benefits. And I think much of this really turns on what is the role of central bank money, particularly at a time when use of cash is declining. So we have access to two types of money. We have commercial bank money, which is typically our bank deposits transmitted over payment networks, particularly the card networks, or we can use central bank money in the form of cash. And there's a big question, which is, would the public find it useful? Would they find it important to have access to that central bank money in digital form as their lives become more digital? Now, I think for me, the really important thing to ask is, what is special about central bank money? What's unique about it? And it really is the fact that it is the safest form of money you can access. And it really forms an anchor of value in our economies and societies. It underpins our understanding of value and our concept of money, and very much would coexist with other types of money, whether that's stable coins, whether it's bank deposits. Cash will continue to exist for those who wish to use it. So really, for me, that particular issue is about the importance of sustaining access to central bank money. Of course, we would also want it to support financial inclusion, support innovation, promote competition, all very important things. But I think we've really got to drill down on what is the specific characteristic of central bank money, which is its security.
Right. You mentioned stablecoin, Tom, which really prompts me to ask Ashley about something I really had been thinking about for a while. So, as Gabi also mentioned, the CBDC movement seemed to sort of gather steam at some point in 2019, which is also the year, if I'm not wrong, might be more or less that year, in which Facebook announced its Libra plan. Its plan for a stablecoin called Libra, backed by a basket of various currencies, bonds, and any kind of other assets, and which was poised to become possibly a global private currency, right? That was the fear. And the kind of popular narrative is that all this interest in CBDC among central bankers was triggered by Facebook stepping into the field of money production in a way. Is that an accurate description, or is it some kind of apologia put forward by cryptocurrency stance?
Yeah, you're right, John, that in summer 2019, there was this big boost, this big fire put under the feet of policymakers, I believe, around the world because of the Libra announcement. Also, the Chinese central bank came out around that summer with more extended details of its CBDC. So these two forces were, as well as just continued growth of stablecoin adoption around the world. So currently, leading stablecoin providers like Tether have about $70 billion in market cap, with US dollar collateral. So that growth, as well as increased use of digital payments in e-commerce and other transactions around the world. And third, in 2019, the COVID-19 pandemic really spurring more use of digital payments and less use of physical cash because of fears about germs. Those three factors seem to have contributed to increased impetus for the investigation of CBDC. And when we look at data about speeches from central banks on CBDC, they turn increasingly positive year by year. So now, there's more speeches that are positive, increasingly so than at that point, and it really.
I think
we lost Ashley.
Oh, she's back. She's back. Are you back? No, she's not back. What happened? Well, let's carry on. Hopefully, Ashley will join us again very soon. Gabriel, hey, yeah, look, Ashley, we lost you for 1 second.
Okay, I'm back.
Yeah, do you want to repeat the last 3 paragraphs of whatever you were saying?
Sure. When we look at BIS data, we can see that the speeches on CBDC have become increasingly positive, and it's kind of interesting. Starting in the new year 2020, there's this threshold in their line graph that shows that overall there's more positive speeches than negative speeches, and now they're overwhelmingly positive. So sentiment of central banks towards CBDC is more positive. And in my view, central banks are also more comfortable saying that they're working on CBDC, whereas in the past, 2018, 2017, and earlier, they were a bit hesitant to publicly state that they're working on CBDC.
Right, that's interesting. I was wondering, I think I recently listened to a speech by a high-ranking, I think, SEC official, or actually Fed official, sorry, who was discussing how, in a way, private stablecoins might not be too bad for the US economy. They might actually be helping the cause of the US dollar. Gabriel, I'm interested in your point of view, from your perspective as someone who has actually been in this field for a while. Do you think that CBDC can and should coexist with other forms of, for instance, stable coins, other cryptocurrencies? Are they mutually exclusive? Are they essentially enemies, or are they just complementary in a way? What's your view about it?
My view is that they're very complementary. I think Andreas Antonopoulos said it the best, is that we're seeing three forms of money. We're seeing the money of monetary authorities and regulators. That's CBDC as an example. We're seeing the money of private corporations. I think you touched on Libra earlier, solutions like Tether. And then we're seeing the money of the people, which are decentralized, consensus-driven cryptocurrencies such as Bitcoin. And all three have a role to play in our current world, and they're all very complementary of each other. I see things like Tether and other stable coins as a means of adding innovation in lieu of a central bank or a monetary authority not doing so. And they also operate at different levels. For example, a central bank digital currency can operate at M1, M0, or cash and coinage and notes. And it can be operated at a tier 1 system, completely circumventing commercial banks altogether, should that be the desire of central bank, although we have not seen any central banks head in this direction. But then you also see a scenario where licensed financial institutions and commercial banks and private corporations are looking at how they can apply their own type of innovation or approach to environments around stable coins. And ultimately, the real answer here is that the consumer now has many more options to choose from. And when you're talking about options on the technological front, that means that you have a lower barrier to entry, a more efficient environment, and a much lower cost, of which all three are big winning factors for consumers. Now, how regulators are going to perceive one over the other is still up in the air. As we see in the United States, there's a growing argument that stable coins are akin to securities. And of course, these decisions have not really been ratified as yet as to what one currency type is over the other. But the end product here is that we will be seeing a much more formed, a much more efficient, and a better monetary market overall. And I think that's a very positive thing.
Right. Absolutely. Tom, I have a question for you. What is the best design, or what are the various designs one should consider when one thinks about CBDC? So should it be a centralized design? Should it be more like a blockchain-like design? What are the advantages of the various models? Is there one model that is more appropriate for a government-backed, central bank-backed digital currency as opposed to stablecoins, for instance? What are the kind of various options on the table? Can you give me a very quick outline of that?
So the basic answer is I wish I knew the answer to that. That's exactly what I'm trying to work on at the moment. What is kind of our guiding principle actually is don't let the technology dictate your economic and functional design. Work out what you want to achieve, work out the economic objectives you've got for it, work out what you want it to do for the user, and then find a technology which works. Don't let the constraints or capabilities of current technology define what you want to achieve from a policy perspective or a user perspective. But obviously, we've got to be realistic as well about what technologies exist. So that's our guiding principle. We have set out some considerations. I would say our central case is a so-called platform model. The central bank provides the money. That's a specialism of ours. It's our comparative advantage. We would host it on our own ledger, maybe DLT, maybe not. No decision taken on that yet. And then the user and the customer would have a relationship with a private payments intermediary or digital wallet, essentially. And then the two would speak to each other through an API. And that really plays to the comparative advantages of each. The private sector meeting customers' needs, innovating, providing value add, the central bank providing the safest form of money. And we think that works. But there are other models, but that's our central case. The final thing I should say as well is that obviously what we do when we think about economic and functional design is establish a set of technology requirements. One requirement which is absolutely non-negotiable is security and operational resilience. There can be absolutely no risk to a central bank system, and that means it would have to have the absolute highest standards of operational resilience and cybersecurity. Ultimately, people have to place trust and confidence in money, and that means the system has to be safe.
Ashley, I think you wanted to add something.
Yeah, it's interesting when we think about design considerations. There's the technology infrastructure like blockchain, not blockchain, but there's also a lot of other parameters that central banks can play with, like the holding account size limits, transaction size limits, interest rates, positive, negative, zero, things like this. And they can actually interact with the policy goals that I mentioned earlier, the ones that central banks have. So, for instance, I mentioned, well, this is what actually a policy goal I didn't mention because it's a bit mixed, but it could be said that CBDC can help contribute to monetary policy implementation. For instance, if a bunch of households have balances in CBDC, then policy rate changes might be able to transmit more quickly and directly to those households instead of more slowly and less fully through bank deposits. But also the central bank can directly affect the interest rate on all of those accounts. But for that to happen, you need very wide adoption throughout the country of the CBDC, and you need them to have high balances for them to care that the interest rate is higher or lower. And for them to have high balances, that could interrupt with or challenge some of the risks that central banks are going to be trying to control, namely disintermediation away from deposit banking and the banking sector, which can cause financial instability and reduce lending in the economy. So that's quite interesting. I also mentioned the policy goal of potentially wanting to reduce banking or payment provider monopoly power. A lot of central banks are considering a two-tiered architecture where banks or private payment service providers actually distribute and custody CBDC on behalf of users. This allows the central banks to not have to do that, to not have to run compliance verifications and customer service. Instead, let the banks and PSPs do that. But if that happens, if there is this two-tiered distribution through those same providers who have monopoly power, that ability to challenge their monopoly power through the CBDC is going to be weaker because people really effectively have in their same app of that bank or their same website for that bank or that PSP, the CBDC and their regular account. And if it's really easy to move between the two, they might not really care. They might only use the CBDC in panics. And you might have less effect of that challenging monopoly power. So there's a whole suite of considerations and complexities with design.
Well, it's going to be a nightmare. I would like to hear very quickly from Tom before we end with Gabriel. We just have 1 minute and 15, but we'll do a bit longer, I suppose. Tom, very briefly, one thing I've been hearing from all the academics and also now from Ashley is essentially the one thing CBDC will allow for is to treat money as software, to program it. Can you give me a sense of what we talk about when we talk about programmable money?
Yeah, good question. So the first thing I should say is that programmability, it's not unique to central bank digital currency. You could do it with, I think, any form of digital payment item, bank deposit, stablecoin, central bank digital currency. So lots of things could be programmed. and therefore it's not really new. We also have it at the moment. I mean, in its most rudimentary form, a direct debit or standing order is a form of programmable money. It's just telling something to operate to rules. And just like direct debits are useful, then programmability could be useful as well. I mean, it could be really helpful for things like budgeting, financial management. A lot of opportunities, I think. And in a CBDC system, I think we would expect the private sector to go and identify what those opportunities were. And so long as they were legal and compliant, they should go and find them and find those best opportunities. And what the central bank should do is provide the platform on which they can do that innovation. I do think, though, it's really important to just say a couple of things on programmability, not least because I think there has been some confusion in the past. The first thing is that for programmability to be useful, the user has to have control of it. So it has to be something which the user is implementing and designing. Secondly, it cannot in any way undermine their privacy. So programmability has to support their privacy. It can't undermine it. And critically, it has to allow the user discretion on how to use their money, and not in any way interfere with their liberties and rights to use their money in the way that they see fit, provided those uses are legal. I think that's really important. The final thing I should say is on Ashley's point, monetary policy opportunities, fiscal opportunities, fascinating. Still the stuff of kind of economist dreams. It's all very conceptual. Monetary policy and fiscal opportunities are not high in our exploration of CBDC in the UK. Maybe they'll come someday, but not currently a major priority for us. And as Ashley said, you've got to have something which is used and useful before you can start to think about all these kind of interesting sort of economist things we might do with them.
Right. Thank you very much, Tom. Gabriel, I have a little voice telling me I have to wrap it up. I want to just hear one thing from you. In your opinion, over the next 5 years, how many countries will adopt CBDC?
Personally, I think it would be irresponsible if it was not 100% of all countries. The utility and the use cases at this present moment have been proven, and I think the jury is not out anymore on whether blockchain technology is useful and whether it has implications for positive change and impact. So in the next 5 years, being pragmatic, I would caution to say 80 to 90% of monetary authorities around the world will be endeavoring to do something with this technology. I'd be shocked if it was not 100% of them. And the ones who weren't using a central bank digital currency would have reasons that are probably beyond our discussion points here tonight.
Okay, the jury is not out, but we are out. We are finished. Thank you very much, everyone. I think we managed in a way to illuminate a bit what CBDC is, what the questions about it are, and also what the opportunities might be. Thank you very much, everyone, and thank you to the audience.